The moving average on your chart right now might be sending you the wrong signal, not because it's broken, but because it's the wrong type. There are two completely different moving averages on every trading platform, and most traders can't actually explain why they'd choose one over the other. By the end of this video, you'll know exactly how the simple moving average and the exponential moving average are calculated, why they move differently on the exact same chart, which one reacts faster, which one filters out more noise, and which one actually fits the way you trade. Let's start with the basics. The simple moving average, or SMA, is the easiest indicator in all of technical analysis. It takes a set number of closing prices, say the last 20 candles, adds them together, and divides by 20. That's the whole formula. Every price in that window counts equally. Today's close matters exactly as much as the close from 3 weeks ago. That equal weighting is what gives the SMA its personality. Because old data carries just as much weight as new data, the SMA moves slowly and smooths out short-term noise really well. That's exactly why it's the standard choice for spotting the big picture trend. Think of the 50-day and 200-day SMA, the two lines behind the famous Golden Cross and Death Cross signals that make headlines every time the market shifts direction. The exponential moving average takes the same core idea, averaging price over a period, but changes one crucial thing: how much weight each price gets. Instead of treating every candle equally, the EM applies a weighting formula that gives more importance to recent prices and less importance to older ones. The math looks intimidating, but the concept isn't. Yesterday's close matters more than the close from 3 weeks ago. That's why, on a chart, the EMA hugs price action more tightly. It turns faster and reacts to a sudden move within a candle or two, instead of 5 or 6. This is exactly why short-term traders lean toward EMAs like the 9, the 12, and the 26, the same numbers you'll recognize from the MACD indicator. So side by side, here's what actually changes. Speed. The EMA reacts faster to new price action. The SMA lags behind. Smoothness. The SMA filters out noise better, so you get fewer false signals in a choppy sideways market. Sensitivity. That same speed that helps the EMA catch a trend early is the exact same weakness that causes more whipsaws. False breakouts that fake you into a trade right before price reverses. Neither one is broken. They're built for different jobs. The SMA is a lagging filter, built for stability. The EMA is a responsive filter, built for speed, which is exactly why which one is better is the wrong question to ask. Quick pause. If breakdowns like this are actually useful, hitting subscribe helps a ton right now since this channel is brand new. Okay, back to the real question. The right question is, which one fits how you actually trade? If you're swing trading or investing on daily or weekly charts and you care about the overall trend, the SMA's smoothness works in your favor. Fewer fakeouts, clearer structure. If you're day trading or scalping on 5-minute or 15-minute charts, where every second of lag costs you money, the EMA's speed is usually the better fit. And honestly, a lot of experienced traders don't pick just one. They use an EMA for early entries and an SMA in the background to confirm the bigger trend is still intact. That single combination filters out a huge number of bad trades. If you want to test this yourself, pull up any chart, add a 20-period SMA and a 20-period EMA on the same asset, and just watch how differently they react to the same candle. This is the exact setup I use on TradingView, since you can stack both indicators and compare them side by side in seconds. I'll leave my link in the description. If it's your first time signing up, you'll get $15 off your first plan through it. If this cleared up SMA versus EMA for you, the next video on this channel builds directly on it, so subscribe if you don't want to miss it. And drop a comment. Do you actually trade with SMA, EMA, or both. I read every one of them. Thanks for watching, and I'll see you in the next one.